Hey everyone, welcome back to the channel. Today, we're diving into a big question. Is it profitable to buy a house in Canada? With soaring real estate prices and fluctuating markets, it's something a lot of people are wondering. In this video, we'll break down the pros and cons, the financial considerations, and whether purchasing property in Canada is a good investment. So, let's get into it. First things first, let's talk about the Canadian housing market itself. Canada's real estate market is diverse, with significant differences between cities. For example, Toronto, Vancouver, and Montreal are some of the most expensive markets, while smaller cities like Halifax or Calgary offer more affordable options. However, the trend across the country has been rising prices, especially in major cities over the past decade. In fact, according to data from the Canadian Real Estate Association, CRA, home prices in Canada have consistently increased year over year, with summers experiencing double-digit growth. But here's the big question: are these rising prices sustainable? Several factors drive home prices in Canada. A few key ones include strong demand from both domestic and international buyers, low interest rates in recent years that have made borrowing cheaper, limited housing supply in major urban centers, immigration, which drives population growth and creates more demand for housing. As of early 2025, Canada's housing market is experiencing notable shifts. The Bank of Canada has reduced its benchmark interest rate to 3.75%, marking the seventh consecutive cut. This move aims to stimulate economic activity amid trade uncertainties with the US, including recent tariffs affecting Canadian exports. In January 2025, the national average home price stood at approximately $670,064, a 1% decline from December 2024 but a 1.6% increase year over year. Sales activity reached 41,118 transactions, a 3.9% year-over-year rise, despite a 4.9% monthly decrease. Regional markets are experiencing diverse trends. For instance, Edmonton has shown resilience, with home prices increasing by 9.9% year-over-year in January 2025, reaching an average of $438,278. In contrast, Toronto's market faced challenges, with home sales plummeting over 25% year-over-year. In February, attributed to economic uncertainties stemming from recent trade tensions. Now, let's look at the pros of buying a home in Canada. The main advantages include: 1. Long-term investment. Real estate has historically been a stable long-term investment in Canada. Home prices tend to appreciate over time, so even though there might be short-term fluctuations, it can be a good way to build wealth over several years. 2. Equity building. When you own a home, you're building equity as you pay off your mortgage, rather than paying rent, which gives you no ownership of the property. 3. Tax benefits. Homeowners can take advantage of certain tax breaks, like the principal residence exemption, which means you don't pay capital gains tax when you sell your primary home. 4. Stability. Having your own home provides a sense of stability and security, especially if you plan to live in Canada long-term. However, potential buyers should consider the following challenges: high home prices. In major urban centers, elevated prices can be prohibitive, especially for first-time buyers. 2. Interest rate sensitivity. While recent rate cuts aim to stimulate the market, higher rates in the past have led to increased mortgage costs, affecting affordability. 3. Market volatility. Economic factors, including trade policies and global economic conditions, can lead to market fluctuations, impacting property values. 4. Maintenance and additional costs. Homeownership entails ongoing expenses, including maintenance, property taxes, and insurance. 5. Property taxes. In Canada, property taxes can be a significant ongoing cost, especially in cities with high property values. These taxes can add up and need to be factored into your budget. So, is it profitable to buy a house in Canada? Well, the answer depends on a few factors. 1. Location. In some cities, like Toronto and Vancouver, the potential for profit through appreciation is high, but so is the risk. In smaller cities, your chances of getting a better deal might be higher, but the long-term gains could be slower. 2. Time horizon. If you plan to live in your home for several years, buying could be a profitable move, as home prices tend to rise over time. If you're looking for a short-term investment, the market may be too unpredictable for immediate gains. 3. Interest rates. With interest rates rising, it could be a less ideal time to buy, but if you lock in a low rate, the long-term investment could still pay off. 4. Market conditions. The Canadian housing market, like any market, has cycles. Some years will be better for sellers, others for buyers. The key is to know when to buy and whether you can afford the long-term commitment. Looking ahead, experts anticipate a mixed outlook. Price modulation. While some forecasts suggest modest price increases, others predict stabilization or slight declines, influenced by economic policies and market demand. Sales activity. Reports indicate potential increases in home sales in certain regions, driven by renewed demand and lower borrowing costs. Trade and economic policies. Ongoing trade negotiations and policies will play a significant role in shaping the housing market's trajectory. In last, buying a home in Canada can be profitable, but it's important to weigh the pros and cons carefully. If you're ready to make the long-term commitment and can afford the current market conditions, homeownership can build wealth over time. However, if you're not financially ready or you're planning to move soon, it might be worth exploring other options. Here are a few tips before you make a decision. Do your research on the local market. What's happening in your city or town? Consider the long-term costs, including property taxes, maintenance, and utilities. Speak with a financial advisor or real estate expert to make sure you're making an informed decision. 4. Stay informed about economic policies and trade developments affecting the housing sector. If you enjoyed this video, don't forget to like, comment, and subscribe. And as always, drop any questions or comments down below. I'd love to hear your thoughts.